accurate projection over the next 5 to 8 days, which is what you see over here in the A5 target column. So these are the actual daily forward projections based on the weighted composite model for all those different factors. We have the actual rolling 16-day correlations on this row right here between each one of these different factors. We can see right down here, so the last 16 days of this factor and the actual S&P action. So we see that rolling correlation here right now, negative 0.5, so it's actually somewhat strongly negative right now. And then for the last 3 days, so we can see that it went from negative 0.4 to negative 0.5, which means that it's getting it's trending more strongly negative. Whereas with, say, the FXI component, it's actually been trending strongly positive, and these are all color-coded to aid for speed of recognition. But this trend is continuing. It's weakened slightly over the last 3 days, but it's still a fairly strong positive correlation. So any one of these composite indicators you can track individually and look at the price series. Usually the inflection points will be underlined and marked according to their significance and the strength of the correlation. But the bottom line is that it gives us these forward price indications, and then we have our statistical arbitrage model, which tells us what our kind of median percentile target should be. And then at the extremes, on the buy end of things, we start with our forward buy target below this. Right now it's 1897. We're basically kind of in no man's land right now. Our next target is the 5th percentile buy, and then the 1st percentile buy. That would be your kind of deep value buy for a multi-week swing buy. And then over here, same thing, kind of our first buy target, 1944, second 95th percentile sell target at 1955, and our final really extreme sell target at 1977. And then when they do apply, you'll sort of have your very short-term day trading targets. Up here right now, they're at 1910 and 1933. If they're applicable, this will be lit up. But those are more for very short-term scalp trades that these will be up. And then based on your proximity to these initial forward buy and forward sell targets, you have a proximity which is also conditionally formatted. So this will give you kind of your quickest indication of whether or not you are below the buy or above the sell targets at any given time. And then we have some other kind of interesting supporting factors. This is just your 5-day forward, so this is what kind of this projected target is based on. But then you also have some other interesting edges which are giving signals as well over to the right here. So those are good to keep an eye on as well. And we conclude with our VIX radar here on the far right tab. This is basically a probability map based on sequential VIX runs. So say you look at a chart of the VIX, the volatility index for S&P 500 option buying, and right now you can see we're in kind of a nice uptrend here. But based on this exponential 33-day exponential moving average in green, you can see it labeled right here. Right now we're right on it. But based on how many days we've been trending above or below that statistically over the last decade plus, I've put together this table here to kind of tell us what the probabilities are of that run continuing. So since we're on a fresh run, below technically with today's close, we're basically going to just start counting up for each day below the 33 exponential moving average. We have sort of this cumulative probability of that run continuing. You can see it gets lower and lower as that run continues, lower and lower. And also you have the sort of the instantaneous probability of that run continuing on any given day. But what's most useful is as these runs really progress and you see maybe a daily closing high and the run starts to pull back a little bit, you have sort of your projected early troughs here. So if you say you see an early trough at day 9, you can maybe expect a run above the 33 to end on day 12, but that does have a range of 6 to 11 days. And conversely, for VIX runs above the 33-day moving average, say you saw a high on day 9, you would expect that VIX run would drop back below by day 16. So definitely a useful tool to kind of handicap. Also, we have monthly averages, so certain months are just kind of statistically have longer volatility runs. This will tell us for peaks, for troughs, and then over here below the main stack we have the months and the total run durations on average. So for the month of February, if we have a VIX run below trend start, on average that's going to run for 28 trading days. So that is the VIX radar, and that will be highlighted blue for whatever the current condition is. And a final interesting feature are the comments, basically kind of wiki style for all the previous questions that users have posed and answers. So this is a good place to go for any questions. If you do want to add your own comments, you can right click any particular cell and just say insert comment, and I will answer that as soon as possible. We can have a little conversation. So if you see other users up here right above and to the right, you can open up a chat log, talk to them, talk to me, work stuff up, talk about the markets. So one of the nice things about Google Docs is that you can do a lot of collaborative work in here as opposed to just working in a static document or trying to talk at people on Twitter, not getting any responses. And here it's all real time and you're all looking at the same stuff. You can see what cells each other have highlighted, so it's very useful for that. So thanks for watching and good hunting.